So I'm betting at least $250,000 on crypto and other risky investments over the course of the next 12 to 18 months. Here's why. I just turned 27 years old. At the time of recording this, I'm worth just under 1.1 million. I'm going to throw up the screenshots just for some proof. I recently, unfortunately, had to pay some quarterly taxes. The market's been iffy. This one of my brokerage's accounts was at like 280, 289 or something like that at some point, and now we're back down. So I was higher than this a few weeks ago. But point is, this is the math. I'm going to be throwing at least 20 to 25% of my net worth into more risky plays. And if you know me and you know this channel, you know that this is like, I'm probably the biggest fan of the S&P. Like, this is probably very unheard of or very weird to be hearing from me. This isn't BS. That's the only thing I've been investing in for the last few years and will continue to. I want to make that very clear. The S&P is going to be my main investment, if you will. But here's why I came to this idea or the conclusion the last couple of weeks. I've been extremely conservative, almost too conservative with my investing and just a lot of my choices in life. Like, I've actually had, I wouldn't say like a midlife crisis, but I've really been thinking about my choices, and I'm very vanilla, which is okay. There's nothing wrong with just VOO and chill. But you know how much I talk about taking risks with my businesses, but I've just thought, like, listen, I other than starting my own company, I haven't really taken much risk. And I listen to Alex Becker all the time, specifically his older videos. Go to his 2020 era. I highly, highly recommend it. This is a guy that talks about constantly having to take risks in your 20s, and it's crucial. And I'm going to break down my math here. I could be completely wrong about all these. I probably am. But at 27, I can afford to take some swings, right? The worst case scenario is I lose all the 20%. Let's say everything goes to zero and I still have my boring S&P money growing, right? That's great. Best case, one of these hits big, just one, and accelerates my wealth by like years. Like, we genuinely could see a 50 or 100x on any of these, and 20% of my net worth is just not enough to completely take me out. So I won't be risking the farm, if you will. But again, just one of these to hit, and I'm in a position to fully retire if I really, really wanted to. So that's the price of all of this. And before I get into any of it, this is not financial advice. This is actually probably pretty stupid. So don't do this. Just watch me be the bait. Let's get into it. So first place, specifically crypto. More importantly, Bitcoin. My thesis for this is there's just a whole bunch of things. Fixed supply, there's a ton of institutional and like almost on a weird level how many interests of companies there are that want this, and I've got 30 years to play it out, right? So I've got like multiple decades until retirement, which is awesome. So there's tons of market shifts that can happen. I think millennials and Gen Z, if you will, are way more comfortable with digital assets than previous generations. There's a very early adoption phase that we're going into, so I'm looking at, you know, companies that are still just on the cusp of buying this stuff. We're talking MicroStrategy, Tesla, freaking the big Blackstone. Like, they're holding so much money of this. You guys don't even understand. And how many big banks are now getting into this. Now, there's this regulatory kind of thing that is scaring me a little bit, where it's like government is really, really into this. But this is what I saw a buddy of mine, or not a buddy of mine, I've spoken to him a couple times on Twitter, but his name's Brian Mokata. I'll throw up the screenshot. He had a video saying why I'm selling my Rolex to buy more Bitcoin. And there's a ton of these videos popping out because it's a fixed supply. There's only going to be 21 million Bitcoin to ever exist. There is no bank that can print more. There's halvings. I don't know how much or how, you know, the halvings even really work, but I do know there's a limited supply, and I absolutely cannot stand the currency and how weak our damn dollar is. So I'm using this as a store of value. I'm seeing this as a huge hedge against currency and just inflation and this weird stuff going on. And just, dude, like, it's just a big diversification thing for me. It's a huge hedge against the stupid dollar. I'm putting all my company profits into this damn thing as well, which is a huge thing. And if you really wanted to, I guess you could go the ETF route, but I'm just buying Bitcoin on its own with a cold wallet and then going from there. So there is, again, like I said, there is a genuine opportunity for this thing to crash 50%, 80%. I've seen that happen before. Am I emotionally prepared for that? I don't really know. We're going to see. And there's a ton of regulatory risks too. Like, governments are still trying to put like stupid bans and crazy restrictions on this stuff. So I'm being very careful with it, but I'm still like, it gets to a point where I'm going to be allocating a ton of money into this if it gets more serious. So I'm watching things play out right now. It's very high risk, but very, very, very high reward if this plays out. And it's just, for my age, personally, I think it's going to be great. Option two is high yield covered call ETFs. And this is the most speculative one. Okay, I've gone down this rabbit hole. I'm going to link some channels down below, like the Canadian Dividend Investor guy. There's some very good channels, some very good cash flow focused portfolios on this. And I'm very growth first. I actually am steering away from SCHD because of how bad the yield is. But I kind of found this happy medium with ticker symbols, ULTY, MSTY, HHIS. These are very index and ETF focused around dividends. So it's actually very interesting. So there's very high volatility, but they are basically trading options against and using covered call strategies to generate income for investors. And there's tons of these popping up now, but there are some very interesting ones. Alti is the kind of culty one. It's got 128% yield, which sounds amazing, but it's down 68% since launch. So it's very interesting, but it's very highly volatile, leveraged assets. The Alti pays weekly. Misty is paying 150% yield, but it's only on MSTR stock. So obviously if MSTR goes up, this one goes up very, very well. All of these are very dividend focused. The one that I already have personally bought, put a couple grand in last week, is to HHIS. That is a Canadian hedged dividend fund by Hamilton. I forget the actual asset capital firm name, but they are very reputable. There's a whole bunch of tickers that they have. This one's very conservative. It's 9 to 15% yield with a lot of less principal erosion, but these are monthly distributions. There's still a lot of dividends, nice, healthy, consistent dividends that are being paid out every single month. So this is very nice for when these actually work is sideways markets. So, it's very good for high volatility periods, for income replacement, which is what I want. It's like, I want to get to a point where I just have 10 to 15,000 a month coming in and just free dividends. No matter what I do, this is why I like Hamilton products, is because there's a lot of range there. There's a lot of data to actually back those up. Even though these are newer, I'm willing to take the bet that these could stick around for a while. Now, Altis, a couple of these other ones are very shaky, but I'm being very careful. And the math you really need to understand here is if the S&P returns 10% annually over 30 years, 10,000 becomes 175. If you cap gains at 5% for that high yield, 10,000 only becomes 43,000. So the income feels good today, but costs you massively long term, which is, again, why I'm very risk averse and keeping a very small percentage to this cash flow, but that high yield kind of outweighs the difference. So my thesis is get paid while I wait. These funds sell options to generate 10 to 15% yields while the market kind of just figures itself out. So the pros are decent income in a low yield world. Everything is getting crazy low interest rates now, and then there's less volatility than just owning the stocks. You still own the underlying companies, and it's good for sideways markets. The caps are very big upside in bull markets. The high yields might not be even real income because it's just return on capital. It's money that they're already paying you back for. It's not actual income generated yet until you get to house money, which is a whole other talking point. And it's very interesting. So do your own research. I'll list some of the creators that I'm watching in this space talk about this stuff now, so you can have your own look. But these are very, very interesting. I've gone down a very deep rabbit hole the last couple of weeks on how volatile these things are, but these dividends are being paid out, and I'm seeing it with a lot of my buddies in this space. So anyways, third and final, AI stocks, or honest to God, just AI everything. Guys, I used Claude to help me organize this video. I use Claude on a daily basis for video ideas, organizing my scripts, or just talking points in general, because I don't really use scripts, but I use talking points to help me organize my thoughts, come up with video ideas when I'm generally stuck, or even thumbnail ideas, title ideas, not even just from a YouTube perspective, but ad scripts or business plans and go-to-market strategies. Like, there is a million ways on how I'm using this. It's a lot of copywriting as well, or even I'm seeing people use developer. I've never used coding softwares or anything like that. I even hired a developer, but people are using this to create code for themselves, which is insane. So I'm trying to focus on the stocks that move these things. And this is why, again, going back to it, I love the S&P, is because this already covers most of this. But what I am going to be doing is investing in the Mag 7 on an individual basis. If you want a little hack, I'm going to be mirroring and copy trading the ticker symbol MAGS, MAGS, by Round Hill Investment Management. A great company, nothing against them. The owner's really, really cool too. I've seen a couple interviews with him, but you don't need to pay the atrocious management fee that they want you to pay. So I'm actually going to be copying the percentages. So they have this, just go to their holdings. You could see how much percentages they're buying, and A creator just made a video on this. It's like, dude, just copy this. If you had $1,000, if you have $10,000 a month, $5,000 a month, couple grand, whatever, you can copy their percentages. So if they're buying 15% of Nvidia, 18% of Tesla, 12% of Meta, you can copy all those. So obviously, every single one of those I just focused on is an AI first company. Every single one of the Mag 7 is betting hundreds of billions on AI. So I'm trying to step up my position, not just to the S&P, but go really, really focused in with, again, like I said, probably to this individual stock stuff, 10%. I'll probably be putting 7 to 10% of my net worth into the Mag 7 on an individual basis. I'm going to set up my pre-recurring buys, and again, I get it. There's a ton of hype around AI. There's a lot of fake AI companies. Many stocks have already ran up huge and their valuations are just absolutely absurd. But I do think this stuff is here to stay. I do think this is only going to get better, and it's scary how good AI is getting in both a good way and a bad way for consumers. So anyways, I wanted to make this video. If you have any questions, please leave them below. I'm curious on all your guys' opinions about this stuff specifically. And as always, if you made it this far, I want to see you win. Thank you for your time.